Worried about the economy slowing down too much and the Fed being too late?
Well, you're right, Scott. We've had quite the week, haven't we, for the US market to digest. And in terms of what we've learned this week from the FOMC and from Powell is this massive focus on the softening of the labour market, right? If you think about where we've been over the course of this year, we came into the year with most people expecting 6 or 7 rate cuts. And then obviously only a few months ago, most people had kicked in the towel and said, look, we're not going to see that magnitude of rate cuts. Some people were even calling for the odd hike, right? Our view has been for a long time that you're going to see this softening come through in the labour market. And I think we are now finally really seeing that rhetoric bear out. And obviously, Powell very much focused on those asymmetric risks to the downside. And I think the way that unemployment has obviously crept up from 3.5% to 4.1%, it's crept up in a pattern that often precedes a more meaningful downturn. So that's got a lot of people quite nervous. And I also think now we can kind of finally say we probably won this war on inflation, right? Some of the stickiest areas where you really struggled to bring inflation down earlier in the year, areas like shelter, that looks like it's finally under control. So the Fed can finally focus its attention on actually looking at this labour market in an awful lot of detail. And I think they're really quite concerned. And that's certainly our view. So our view is you're going to get this first cut in September. That's obviously now a view that everybody shares. And the market pretty much looking for these 3 cuts this year and even sort of pricing 5 in for next year, predicated on these concerns. But it's a massive change that we've seen over the course of this year, and it's an awful lot for the market to digest.
I mean, I think people may agree with you that the Fed may have won the war on inflation, and I think they would believe that at this point. But the collateral damage, of course, is what have they done to the rest of the economy and to the consumer? And those long and variable lags that were really longer and really variable, perhaps much longer and more so than people expected them to be, but that they're finally showing up and that history is going to at least rhyme in that the Fed always sort of does what you know, when they start cutting rates, it's always too late, just like they were too late when they started hiking. And then it's just going to be too late to get out of that mess.
I think you may see a mild technical recession, right? But we're very constructive still, actually, in aggregate on equity markets. And I'll tell you a little bit about why that is and why we're not saying this is going to be some kind of major downturn here. I think when you look at the shape of earnings that we're seeing so far, obviously, the US is faring significantly better than Europe, right? You're seeing a number of companies at least come out and beat and hold their guidance. When we came in to this third quarter, we the view for the S&P that you'd get to a 5,600 target at the end of the year. So implicitly, we were saying buy the pullbacks rather than being uber bullish. But it was still fairly selectively risk on. And our feeling is that within that bucket, you should hold on to your large cap, your Mag 7, and you should be adding selectively some of the interest rate exposed areas, whether that's banks, whether that's real estate, whether it's parts of consumer. But you're right, the big test is going to be how well the consumer can hold up and whether the Fed is going to do enough. Now, I think if you listen to the rhetoric that's coming out of Powell and the FOMC, you know, these 50 basis point cuts are not off the table, right? They're going to be looking at this data with a laser focus. That isn't our forecast. We think we're going to get the 325 cuts this year starting in September. But I think there is that risk that if they need to do more, they will do more to try and ensure as close to a soft landing as we can possibly get.